So observing the S&P, the Nasdaq, and the Dow Jones on the 4-hour time frame chart, we can see picking up from where we left off on Wednesday night, our analysis was relatively spot on in terms of weekly halving theory and profiling of the week. All right, if we take a look, we can see that Tuesday created the low of the week, which is what we wanted to see. And then the second half of the week created the high of the week, right? So this is Chronos theory, weekly halving theory, a very, very good example, right? And it's not hindsight. You saw it play out as we were talking about it. We can see Monday was a little bit of an in-between profile. That's what we had said Monday night. It had expanded higher, but it was relatively consolidative on the Nasdaq. We wanted to see price continue higher, but Tuesday failed to do so. But upon Tuesday's close, right, gaining new information, we found a nice reversion level for price to play off of. And as we can see, that marked out the low of the week, and price utilized this reversion level here to propel higher, going towards Monday's highs. Wednesday closed out, respecting order flow, respecting Chronos, weekly halving theory. So Thursday, we conducted price should it trade higher until proven otherwise. And as we can see, a nice setup was offered Thursday morning for continuation higher. On Friday, there was a little bit of a curveball, right? The market ended up reversing and falling back within the range, which sometimes happens on Fridays. But as we can see here, the system played out for the most part. We were able to identify a high probability scenario in terms of gauging the middle of the week, but dropping lower going into Thursday. Keep in mind, Wednesday night we had said continuation higher until proven otherwise. So now going into Thursday's price action, we can see coming into the morning session, and we're looking strictly between the S&P 500 and the Nasdaq. Were there any strong bearish signatures that could have hinted for price to completely fall lower and reverse? Not really. The only thing that was there was this bearish daily cycle sequential SMT, which as we can see was highly unsymmetrical. Now the same thing could be said about the bullish SMT, but keep in mind on what the order flow was for the week. We wanted to see Thursday create the high of the week, or not Thursday in specific, but Thursday and or Friday create the high of the week. So we wanted to see a continuation of higher prices, right? There was no confirmation that price was likely to continue to fall back within the range from what was created on Wednesday. So keeping that in mind, the bullish daily cycle sequential SMT that occurred Thursday morning should have caught your attention. And as we can see, the time that this SMT occurred was when price was beneath both the true day open as well as the true market session open. Now, I've explained before, SMTs, specifically on the daily cycle, the 90-minute cycle, that form either above both true market session or true open or below both market session true open as well as the true open are high probability because you stack the true opens and it is a deeper means of a premium or a deeper means of a discount in terms of time. But as we can see here, from the daily cycle sequential SMT, right, price dropped lower and we formed a nice 15-minute TPD. Now this could have been a little iffy, right? Trading right before 9:30. I know some of you don't like to do that. That's fine. So what could you have done seeing this? Seeing a daily cycle sequential SMT with a 9:15 TPD, confirming it. What should have been the correct thought process? How could you have known that this was a high probability setup for price to trade higher? Look for a market maker model. Exactly. So, number one, if we were looking for higher prices, this would have been the target for the NASDAQ, right? This high here. So we'll keep note of this high as it was the current high of the day. But from a 15-minute chart, what time frame chart do we then draw towards? 5 minute. So now we'll look on a 5 minute. Okay, what do we see? What's there? This is the opening price of the new 15-minute candle. Yes, there is a reversion level right here. Right? What else? Gap, yep. Here. Let me make it a little bit easier. What do we see? Sequential SMT, yes. 90-minute cycle. In terms of a market maker model, consolidation. Now, what is special about this consolidation? Unsymmetrical. What have you learned in the past about pairing unsymmetrical price action with original consolidations? For identifying them. Strong liquidity, right? It works extremely well together. So, seeing this, right, we have an original consolidation, price breaks lower. You could call this, the first phase accumulation, but a Kraken correlation in support of higher prices occurs, and we have a TPD. So, looking at price, this very point in time, although there are SMTs on both sides of the market, which side looks higher probability? Which side seems as though it would deliver? The bullish side. So we'll let it play out. Right, 930 expanded higher. Continuation, going to these highs right here, which would be the original consolidation. Now, here is the new thing, right? Because there's always new things. Right? I always have some tricks up my sleeve. Just because, and this is primarily for the lower time frame, just because a market maker model, the original consolidation, just because either the highs, if you're bullish, or the lows, if you're bearish, just because those highs get ran, doesn't necessarily mean the run is completely over, right? So this would be the original consolidation. Like I said, price breaks lower, reversal, we trade back higher to the original consolidation highs. So market maker model complete. Perfect. But we still have what resting above market price? This high here, and also these clean highs right here. So we play the tape a little bit longer, right? We can see price trades higher, going to these highs, and then it falls just short underneath this high right here, and then falls back within the range. Now, what did you learn on Wednesday about price falling just short of a target with no Kraken correlation, right? There was no SMT here. There was nothing as to why price should have fallen lower. Whenever price falls just short of a target, like this here, there's a very good chance that this is just a retracement and price is likely to continue drawing back higher. Now, here's the part where the market maker model isn't entirely finished. Let's take that original consolidation and draw it across. You can treat if there is liquidity or a potential target after a market maker model is complete. You can treat this as a breaker. You could treat it as higher high, lower low, higher high, breaker. Yes, using the consolidation as an entry zone. So does that make sense? And I believe I was supposed to go to this slide to show you the 5-minute chart, so we'll just close out of this. But that's all we have for this overview. So now we can do some Q&A, and then we can go ahead and wrap it up. So the consolidation will provide a second opportunity if the target wasn't reached. Yes, you can treat it as a breaker. Go over Wednesday. We already went over Wednesday. We already went over that. So your weekly time frame TPD, yes, but we'll have to see how the S&P opens up because this is the candles close right here, right? And if we have, usually whenever we have a TPD between the S&P and the Nasdaq, that's not a very good sign. I wouldn't say high of the year, but previously, whenever we've seen something like this, it causes a bit of disruption. What do you mean by disruption? Like a larger retracement drop. But I wouldn't say high of the year. Could be wrong though. But this definitely could be a catalyst for sending Bitcoin down to the 60K, 50K region, which would follow in perfectly in tune with our expectations that we drew a while back. I don't think the low of the year is in. Yeah. If if we make a new low of the year, we'll have bigger issues on our hands. Can you go over the New York Opens price action, please, in terms of what could have been taken? I think nothing could have been took until we had the bullish 90-minute sequential S&T in Q4. So, taking a look at current price action, we'll look at Thursday, even though I hate reviewing hindsight because that just doesn't feel right. But we can see price expands lower, right? Early into Thursday, or not early into Thursday, early into Friday. Right. We can see that we had a very large range in Asia session as well as London session. And the opening, or coming into the opening of 9:30, was about right here. Right. Now, generally, whenever we have, a very large range overnight, what does that indicate for the morning? Consolidation. Not necessarily consolidation, but just a little bit more difficult price action. So it either is consolidation or retracement. Anytime you see the market expand a great deal overnight, there's a low chance that upon 9:30 it'll just continue dropping and dropping and dropping. And the way as a general rule of thumb, right? As a general rule of thumb, either number one, the true open of the day, or number two, a relevant PD array around the true open of the day. That's where you would want to see price rebalance to before continuation, in that specific direction where it had initially drew towards. So as we can see here, coming into the open of 930, right, price shot lower, traded back within the range. So seeing something like this, your eye should have been, okay, I want to see price retrace higher somewhere around this region before continuing lower. For proper order flow and proper market dynamics, that's something that you want to see. You don't want to see the markets just, drop and then continue dropping, especially if there's nothing on the outside world that could have or could be a support of that. So we can see the market trace higher, right? Provides a cracking correlation inside of the 4 hour gap and then begins breaking lower. So that could have been the correct thought process. But instead of looking for a short late in the afternoon, the correct idea could have been looking for a long or a retracement, inside of this area. Does that make sense? Since March, I've only been trading the 5-minute gap setup. I've been journaling every trade, including the gap time, the sequential SMT, whether the gap occurred or appeared across all assets, which trades worked or didn't. By the end of the year, I'll send you all the stats. That's what I want to see. But let me ask you a question. With that model, I know as soon as we started talking about it, like a week or two later, it didn't start performing as well. Which individual models, they have phases throughout the year when they perform amazing and when they perform not the best. But so far, what are the stats on them? I'm curious. If we do continue down next week, what would your targets be? We continue lower, obviously on the Dow, considering how close it is. Previous week's low. And then same thing for the rest of the assets. Right. But as always, we want to see what happens on Monday. Because if price opens up on Monday and then completely blows out through this high here on this 4 hour candle and then closes, somewhere around here, there's a good chance we'll go for this high. Base is now a speaker. $75% win rate. Best day for the setup is Friday, 9:30 gap time. Yep. Now, you can combine certain things to make it even better using Chronos. And I've already dropped a few hints along the way. But let me ask you the data on, and I know there's probably not going to be much on it, but what was the data for bearish fair value gaps on Monday? If you had a bearish setup on Monday, what percentage of the time did it pan out? If you traded Monday. For bearish, expect Sunday and Monday to trade higher for that wick to form. Yep. One win on a Monday bullish setup, one loss on a Monday bearish setup. So even though we don't really have that much to work with, it still applies. Let's say that the Dow is decoupled and the S&P and the Nasdaq have formed the previous quarter's low at the same time, and that low gets taken out on the next quarter. Can I consider it as a symmetrically timed sequential SMT? The Dow is decoupled, the S&P and the Nasdaq. So let me draw it out. So the Dow is off doing its own thing. Now, important follow-up question is: did the Dow create the symmetrically timed low as well? No. And then the low gets taken out in the next quarter. Can I consider that a symmetrically timed sequential SMT? So it would only be, so if the Dow is decoupled, right, you would only really want to consider it if the SMT occurred between the S&P 500 and the Nasdaq. An SMT with the Dow, even if the Dow drops lower, takes out that low, etc. You're saying if the S&P and the Nasdaq has a 3 a.m. low, the Dow has a 5 a.m. low. I mean, it still could be of use. As, like I was mentioned, a general rule of thumb, the further away in terms of symmetricality, the lower the probability. You know, not every setup has to be 100% perfect symmetrical in order to be taken. If it's 3 a.m. and 4 a.m. or 3 a.m. and 5 a.m., it still could be of use, but adding the other factor with the Dow and with it being decoupled makes it a little bit iffy. Why are you paying attention to January 26th weekly fair value gap to see if we respect it when we're in a monthly fair value gap? Why do we look at the weekly gap? Are you talking about Bitcoin? I mean, it's the same thing. The monthly gap follows in alignment with the weekly gap. The weekly gap is just a tad bit bigger. On your personal account, do you ever go in with 5 minis? If risk allows, then yes. But more times than not, risk does not allow 5 minis. But that's when the market is coupled. So in this case, the Dow is decoupled. So can I avoid the Dow completely from the equation? You could if you wanted to, yeah. It's decoupled. What is your average risk? Anywhere between 4,000 to 8,000. It just depends on the setup. Like I said, like I've told you guys before, for personal trading accounts, static 1% risk or percentage based risk is a facade if you're trading a personal account. Because you're not trading the personal account funds, you're trading what you have to your name. Had a close friend in trading who quit after blowing his 5-figure live account. Very sad to see people you're with for multiple years lose the spark because of a mistake they made in a day and how fast everything can go down. Oh, yeah. But at the end of the day, they're the ones that do it to themselves, right? Consciously. And I mean, all of us here, I mean, I've blown accounts before. Everybody here has blown an account. It's nothing to be ashamed of. But right before you blew that account, you knew exactly what you were doing. You knew that there was an opportunity, or not opportunity, but a chance that you were no longer going to be able to participate by making that decision of whatever it was at the time. retracements and continuations do rely on weighted probabilities the most. Yes. What is the most you blew on a personal account with? I'll tell you, it was last year. Oh my god. So I was driving back from a funeral. I was driving back from the burial ceremony, and I was on the highway headed back to the house, and I was said, you know what, I see a pretty good setup here. Let me go ahead and enter in on this. And, doing about 80 miles per hour while trying to calculate in your head what you're trying to risk and also hitting the right buttons, it's kind of a difficult task. Uh, I placed what I thought was proper risk at the time, and then look back a few hours later at the chart, and I did not risk what I thought I had wanted to risk, and it was about 15 grand down the drain because I said I'm going to drive and trade at the same time. So moral of the story, don't drive and trade at the same time. Started reading The Best Loser Wins yesterday. It's a very good book. Don't be a drunk driver. Or no. Be a drunk driver, don't be a drunk crasher. It's a big difference. Actually, 2 wins, 1 loss. Yep. Testimony to it right there. Don't short Mondays. But do we have any more questions about anything? All right, so I think we'll go ahead and call this one here. So with that being said, hopefully you all found this one insightful. I'll speak with you all again. Expectations for next week, like I said, wait for Monday to close. But good luck and enjoy your weekend.